Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks, and it's a 3-day weekend if you happen to be in the market because it's President's Day coming Monday. And then many other folks have off, so it's a beautiful thing. Remember that there's a part of life for which you are the explanation. Market-wise, let's take a look at it out here. We have the Dow Industrials up 297, NASDAQ up 65, S&P's up 32, gold contract down $8.70, trading at $1,239 an ounce. Now, what you had with gold this week, folks, is this. You had wide price spread, accelerated volume, take out the swing points, have it all. Gold, $12.39. Gold's on its way up to the $13.92 area. Big number. Silver. Silver today down 3 cents. You're at $15.76. Silver is still building cause to get into this last swing point from October. That is approximately the $16.28 area. Silver's lagging in a correlation between silver and gold. Platinum. Platinum is trading at $9.56. You have light sweet crude. Now, light sweet crude caught a bid off the bottom today. Light sweet crude right now is up $3. You're trading at $29.12. Bonds, the 10-year down 1 point, the 30-year down 2, and we'll see whether that is all she wrote inside the bond market. The bond market has been a one-way trade in the last 3 weeks, straight up. You had a monster day out here yesterday and a give up in price. King dollar. King dollar up 376 ticks, trading at 95.95. The euro is down 70 at 112, and the yen is trading at 113.27. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? We take a look at the SPY. What you're going to see is this. On the daily, what we did is that we came in this past Monday. We came down to a price point of 182.80. We did 191 million shares there. That was going into the January 20th. January 20th is our benchmark as we're walking you through this. January 20th had 286 million shares. Monday, we come into it with 191. We go up into Wednesday. Market gives it up again. You come right back down again, you come down with 219 million. So you get 219 million still going against the January 20th of 286 million. So you're still down there. Market came back too fast in order to break down. Why? Because the amount of energy that it took just to come down Monday was a lot. Didn't build enough cause, comes back in. You can expect a bounce. That correlation goes all the way over to the 24th of August. Because the 24th of August, folks, we did 507 million shares. It's going to take a lot more cause to basically break that down. Now, if we bring this and we look this at the weekly, what you're going to see on the weekly is this. The weekly, we get another 50 minutes trading. The weekly we came down, let's say we're going to do about 870 million. We're going into 846. So what that says is that we're going to be back down at those levels. But guess what? Not right now. Not until we go up and try to get into the 194 level. Right now we're at 186, and the 194 is just the other side of the small consolidation that we're in, and I suspect that we're going to make a run for that level next week. NDX 100, the 3 Qs. Now, NDX 100 has a little bit more work to do. It's doing it, but it has to get back inside its higher range. NDX 100 also tested the January 20th level, did it with dramatically lighter volume, and what it has managed to do today, it's into the bottom of that bar now. So that's the beginning of trying to get inside the range. The range that I look at is 99.51. There was a spike low there at 97.25. Once it gets inside 99.51, it'd be a little bit better off. I do expect that's going to happen, by the way. If we take a look at that, that's on your daily. You put that on the weekly, what you're going to have is that the weekly also has big volume. We've done 340 million shares. Bottom line, that has broken the minor swing. It certainly didn't break the August swing. The August swing is 449 million. Huge number. Now, gold. What do we do with the gold contract? What you have with gold is this, folks. Wide price spread, accelerated volume. It looks like this thing's getting ready again, which would just be really wild. On a long-term basis, this is what you have. it took apart its down channel. I mean, and when you take apart a down channel, you have wide price spread, you have accelerated volume, you have all of that. Bottom line, gold is set up right now to get to $13.92. $13.92 is the March high of 2014. XAU, HUI, same type of setup, took it out really nice. We put these on weeklies. What you're going to see, the XAU right now is trading at a price point of 60.39, and that is set up to go to 102. Not a bad move. Actually, a pretty amazing move. We go take a look at the HUI, the Gold Bugs Index. The Gold Bugs Index is even stronger, which gives you the indication that the metal price will even be stronger. Why? Because in order to be in the XAU, bottom line, you cannot sell more than 1.5 years supply into the marketplace. The HUI is trading at 163. Game on for here is 250. That's a big move, man. But that's where it is. And more than likely what you're going to have is this. This is what's going to be, this is what's always sad about big runs. That is when, you know, this thing has been an extraordinary run on the way down, but once we get up there, then you'll hear everyone talk about gold. Everyone's going to want to buy gold, and guess what? That's when gold could turn around and consolidate for another year or 2 years, because this run's been pretty extraordinary thus far, and I expect once you get another couple $100, there'll be a lot more people that want to be in it, and, you know, bottom line is that it'll be coming back into where there's a big supply line. What we did have happen last night, and this is where you want to wrap your head around the ETF structures. The GLD last night, bottom line, bought a huge amount. Well, they had to buy a huge amount of gold. Why? Because what happens is that when the GLD goes up, the GLD has to go out in the marketplace that day, and, well, particularly when it goes up this much, in order to basically keep that net asset value from the value of gold, because the GLD trades at 10% of the price of gold minus its fees. So what that does is that puts, I call it, be on the right side of the trade, and what that does, where the chicken and egg come. The gold contract goes up, the GLD goes up. The GLD has to buy gold that night. What does that do? That puts more demand in the physical gold market. Put physical demand in the gold market, the GLD goes up. It's a beautiful thing. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow right now is up 300. NASDAQ is up 68. S&Ps are up 34. We're going to be right back.